Welcome to the ultimate introduction to trading. This course has two straightforward goals with significant implications. First, to provide an understanding of financial markets and trading through multidisciplinary and interdisciplinary approaches. And second, to highlight the necessity and limitations of trading education. By the end of this course, you'll gain a sophisticated understanding of the many nuances and complexities within the trading world. We'll explore various challenging and fascinating aspects of trading, drawing insights from multiple scientific disciplines like economics, econometrics, finance, physics, game theory, statistics, nonlinear dynamics, fractal geometry, behavioral finance, neurofinance, computer science, and more. Additionally, we'll cover essential trading tools such as price action analysis, quantitative analysis, risk management, and performance appraisal. For more information on how to become a profitable trader, check the links in the description below. This course will be divided into multiple parts, and I'll upload them as quickly as possible without compromising quality. Best of all, this course will be entirely free. Without further ado, let's dive into the first part. Before going further, it's crucial to clarify the concepts of market, price, and trading. Many traders think they understand these seemingly simple concepts, but misunderstandings about their interplay often lead to critical errors later on. First, I'll define each concept and then place them in context so you can see where misconceptions often arise. Let's start with the concept of a market. A market is a decentralized logical framework where diverse participants interact. The term decentralized means no single authority controls the market. Instead, it is shaped by countless decisions from participants with different goals, strategies, capital levels, access to information, and time horizons. The logical framework refers to the set of rules enabling this vast diversity to coexist and interact within the same environment. Because of its decentralized nature, the market itself cannot be fully observed in real time. Market participants, however, require a medium of interaction, which brings us to the concept of price. Price is the ultimate simplification of a market. It compresses the interactions among all participants and their influencing factors into a single variable. In this sense, price provides a localized view of an otherwise non-local market. However, this compression comes at a cost, a loss of information. As a result, market participants can only observe the market superficially through price charts. For more information on how to become a profitable trader, check the links in the description below. A useful analogy for understanding this concept is imagining price as a shadow on a wall. The market itself is like a three-dimensional object, while price is a two-dimensional shadow of that object. By combining different perspectives or lights, we can infer the shape of the object, market, more accurately. Similarly, in trading, integrating various analytical perspectives allows us to better understand the complexities of the market. Trading is often misunderstood as interacting with the market or the price chart. In reality, trading is the interaction among market participants through the medium of price. When a trader buys, they are not buying from the market or the chart. They are buying from another trader willing to sell at that specific moment. This distinction is vital because it shifts our focus from price charts to the actions and strategies of other market participants. Relying solely on price action without understanding the market dynamics and strategies of other participants often leads to false conclusions and ineffective trading decisions. Most traders mistakenly believe that consistent profitability is the primary goal, yet they fail to define what it means precisely. The actual goal of trading is to outperform the market on a risk-adjusted basis over the long term. Achieving this requires more than just understanding price action. It demands a deep grasp of market dynamics and a disciplined approach to trading education. For more information on how to become a profitable trader, check the links in the description below. A helpful analogy is to compare trading to a game of chess. The market represents the rules of the game, price is analogous to the chessboard, and market participants are the players. Just as a chess player competes against their opponent using the rules and the board, a trader competes against other traders through the medium of price. However, unlike chess, trading is not purely a game of skill. It is a stochastic game involving elements of randomness and probability. To summarize, markets are decentralized logical frameworks allowing diverse participants to interact. Price is the ultimate simplification of the market and serves as the medium of interaction. Trading is the interaction among market participants through price within the framework of the market. The limitations of price require traders to employ multiple analytical frameworks to extract the most information possible. In the next part of this course, we'll explore why trading requires a multidisciplinary approach rather than a monodisciplinary one. Make sure to fully grasp the distinctions between markets, price, and trading before proceeding to the next part. For more information on how to become a profitable trader, check the links in the description below. If you enjoyed this presentation, please support the channel by clicking the like button, subscribing, activating notifications, leaving your feedback in the comments, and sharing this video with your trading community.